Hello everyone, I'll get started in just a moment. Hello everyone, welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time. Oops. Streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. Just want to let everyone know that Bookmap is encouraging everyone to join Bookmap Discord. You will need a Bookmap subscription to fully participate in Bookmap Discord in the chat. And there is a free subscription available. Once you subscribe, you will need to verify your account. Then you can fully participate in chat and watch all the streams of Bookmap Discord. That would be mine, my chat room, as well as many others. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. Certainly in the large cap tech stocks that I trade and follow, like the Magnificent Seven stocks, as well as the equity index futures, like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades, and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And NQ, the NQ futures contract, is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome. And I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Hector. Welcome. Glad you're here. Long time no see. Glad you're back. And hello, Gray. Welcome. Happy New Year to you as well. Here's my agenda for today, Monday, January 6th. First of all, I want to go over news items, economic data, and events for this week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. When I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to show those stocks and take a look at them. All right, let's get started with news items. And first of all, everyone, welcome. Hope you had a great holiday season. Now back at it, sort of. A few more holidays coming up. All right, so let's take a look at economic data and events for the week. Let's go to the events calendar on the Spotgamma home screen dashboard home screen. Events calendar for this week. There was S&P Global Services PMI out this morning. Typically not the market mover that the ISM PMI data is. So, which actually comes out on Tuesday. That's Tuesday ISM Services PMI. So that's the first data release, 10 a.m. tomorrow that may be high impact. Also the JOLTS data. That's on Tuesday. Then Wednesday at 2 p.m., FOMC minutes come out. Also note that the jobless claims come out on at 8:30 a.m. Eastern time on Wednesday as well, due to the market holiday on Thursday. That is due to the funeral for former President Jimmy Carter. Markets will be closed on Thursday. And then Friday, the jobs report comes out, 8:30 a.m. Eastern Time, big data release for the week, and then Michigan consumer sentiment at 10 a.m. All right, so that's the week coming up. Thursday holiday, Wednesday FOMC minutes, Thursday market holiday, and then Friday 8:30 a.m. Eastern Time jobs report, the key events for the week. All right, let's move on to positional analysis. I'm going to start with the S&P 500. I have zoomed out quite a bit to show that this rally began overnight. I'll focus on the regular trading hours in just a moment. All right, so that is the ES futures, S&P 500 futures in Bookmap. And before I take a closer look at this chart, I'm going to take a look at a higher time frame. I'm going to go to SPX. This is a chart in Thinkorswim. It is a 1 year, 1 day chart. Rally continues. So that is the 1 day chart. Let's take a look now at a shorter time frame. Let's go to a 30-day, 1 hour chart. And let me point out some key events. We'll look at key events, price action, and then levels on this chart. First of all, reaction after the December FOMC meeting, big drop. SPX found support right around 58.32. Rallied back up to this trend line that was already in place, and then dropped back down to make a double bottom right around 58.30 again, and then rallied back up just short of this trend line. So this trend line on the upside and this level at 58.30 on the downside is the current range for SPX. All right, let's take a look at some of the other levels on this chart. I'm going to start with the expected moves. This is the lower and upper weekly expected move. This is for SPX based on the closing price for SPX from last Friday. These levels remain in place for the entire week. Note SPX almost made it up to that upper weekly expected move today, and then is now trading lower. All right, so that's the expected move for the week. Expected move for the day, shown with the dashed blue lines. SPX gapped up above the upper daily expected move and still is trading above that level. Again, that's based on the options market, based on the closing price for SPX from last Friday. And I do post those levels in Discord in the Options-Doug chat channel every day the evening before. All right, those are the expected moves. Now let's take a look at the Spotgamma levels. These are the dark red horizontal lines. They're based on gamma-weighted open interest. They're provided to Spotgamma subscribers. I'm going to take a look at the key daily levels. First of all, here's the put wall, 5,900. That's a strike with large net negative gamma. That can be expected to act as support. And that level did move up from Friday. Next level up is the volatility trigger at 59.40. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. We'll take a closer look at gamma in just a couple of minutes. And note the volatility trigger did shift slightly lower from Friday. Next level up is the absolute gamma strike. That's at 6,000. That level has definitely been in play for today. That is the strike with the largest absolute positive and negative gamma. In a positive gamma environment, will definitely tend to act as a magnet for price. And then finally, the call wall is at 6,200. That's a strike with the largest net positive gamma. That can be expected to act as resistance, and that level is well out of play for today. So the key level in play for today, again, is the absolute gamma strike at 6,000. All right, shifts in levels. For SPX, again, volatility trigger slightly lower, put wall higher. And for SPY, there was a bullish hat trick. Volatility trigger, put wall, and absolute gamma strike also all shifted higher. All right, let's wrap up our view of SPX with a look at a 1-minute chart. I'm showing about 3 days worth of data. So there's that double bottom test right around 59.30 last Thursday. And then rally started after that test right around 2 p.m. on Thursday. Continued Friday and today until it looks like SPX is finally finding resistance. And now heading back down. Here's that 6,000 level. Acting as support now, resistance. And we'll watch that level as time goes on. Could act as a magnet for price if traders start taking positive delta options positions again. So again, SPX well above its volatility trigger. All right, let's go to Bookmap now. So again, Bookmap, this rally began in the overnight session, about half the rally. Pulled back right before the cash open. And the S&P 500 found support at this cluster of levels. That is VWAP, that light blue line. And then also this 59.70 support level, that is SPX. And a couple of other SPX levels just above that. And that dashed blue line is the ES, upper daily expected move. So a cluster of levels, support, and price moved higher. And that was before the cash open. That's right around 9:20. And we'll take a look at setups in just a few minutes. Here's the 6,000 level right there. That's SPX 6,000. Also key level, SPY 600, large gamma 2, and note all the sellers that came in just below that level. And that's what seemed to have turned the S&P 500 away. All right, let's take a look at NASDAQ. Again, we'll get to setups in just a moment. Take a look at NASDAQ. And so far today, there are no spot gamma levels in play for today. Let's just take a quick look at, see there are no white lines, no white levels. Take a quick look at the underlying index charts. We'll start with NDX. Last Thursday, support at the 20,800 put wall, and rally continued Friday, and then the gap up today. There's the call wall. So NDX is trading up above its call wall, also the volatility trigger. All right, let's take a look at QQQ. Zoom in on this. All right, QQQ, again, no spot gamma levels in play for today. And for NDX, the volatility trigger shifted higher. And for QQQ, the volatility trigger and absolute gamma strike both shifted higher. All right, so it looks like NQ, this is the NQ futures of Bookmap, found resistance right at the 21,900 level. And that's also right around QQQ 528. Again, we'll take a look at setups in a few minutes. Let's wrap up our positional analysis by taking a look at gamma. Then we'll get back to the charts. Quick look at gamma. I start with market makers gamma notional at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. Note, with the exception of NDX, all these numbers are negative, less negative than Friday, so all shifted higher. Still negative, again, except for NDX. And for a negative gamma environment, this indicates market makers are, traders are long puts, market makers are short puts. With the gap up today, SPX moved up into positive gamma. This is the trace gamma heat map in Bookmap. Blue shaded area showing positive gamma. Let's jump back in time toward the beginning of the day. We'll go to about 9:40. Positive gamma. Again, the blue shaded area with the gap up above the volatility trigger. And then we'll step through time. The purple line right around price is the hero signal, and that is the index signal. All right, note a little bit of negative gamma coming in. That's right around the spot gamma implied one-day move high, and also plenty of negative gamma down below the spot gamma implied one-day move low, as well as the volatility trigger. All right, so that's the S&P 500. So based on this, I was looking for lower volatility, directional bias bullish. That played out in the morning. That was based on the shifts higher in levels. Note now that, let's take a look. Let's go back to back toward the beginning of the day. Note the pretty low stability index. So still looking for, again, lower volatility than last week, but still high to moderate volatility based on the stability index of in the lower third, right around 32% at the beginning of the day, now still at 32%. All right, let's take a look at some setups now. And as always, I'm going to start with the S&P 500. I'm going to take a look at what options traders have been doing. And again, starting with the S&P 500, this is the hero signal, and this is the index hero signal showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. And there's another signal that we can take a look at for the S&P 500. And it looks like this. So this is the S&P equity signal showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. And looks like we're taking negative delta positions from the open, finally getting their way. So up until about noon, this signal was not very clear. So let's go back. Actually, I'm going to jump to puts and calls. Go back to the index signal. And to me, this is a little bit more clear today. So what this is showing, let me zoom in just a bit. These are index call buyers. That's shown by the rising orange line. Traders buy calls, market makers sell the calls, and they have to buy, in this case, ES futures to hedge their delta exposure. So it took a little bit of detective work this morning to figure out what was driving price for the S&P 500, and it was call buyers in the index. So let's go back to Bookmap now. Go to the S&P 500. Let's zoom in. So in the index, call buyers, I'm just showing regular trading hours, but there were most likely call buyers in before the cash open. Here in Bookmap, again, I mentioned this cluster of levels, also VWAP, acting as support. This is right around 920. Here's the cash open right here at 930. And there were also already aggressive buyers coming in. That's shown by the green volume dots, shown by rising cumulative volume delta that really began right around 915. Then as price started to move higher, ES started to move higher, the yellow line is showing buy stop orders helped to fuel that move higher. I'm going to darken up the heat map a little bit. So the heat map in Bookmap is showing a history of limit orders in the order book. And these are limit sell orders, shown by this dark red shading here, red and orange, acting as resistance. So those sellers at right around 60, 70 to, 67 to 70 help to turn price lower. Also note, right at the open, large traders were selling with iceberg orders, and it looks like they may finally be getting their way. Let's zoom back out. So large traders were fading that move higher with iceberg orders. Now they may be buying weakness, fading the move higher. Or fading the move lower, I'm sorry. All right, so that's the S&P 500. Let's go back to Hero. And this is so let's focus on the patterns here. So opening drive, traders buy calls, market makers sell the calls, and they buy, in this case, ES futures to hedge the delta exposure, call peak, call reversal as price moves up toward that high liquidity in Bookmap, shown in Bookmap, limit sell orders, and price starts to move higher. So that fuel driving price is gone now. The call buyers have taken the foot off the gas, start selling calls, and note at the same time, traders start buying puts. So that's a continuation pattern with the calls and puts moving in the same direction. In this case, it's bearish, and that is definitely a bearish pattern. So opening drive up until about 11:30, call peak pattern, and then blue line, orange line moving the same direction down, and that's bearish. Let's take a look at equity. So we also know that traders from the open were buying puts and selling calls. And that's certainly helping to fuel that move lower. Let's just take a look at Mag 7. So this is, you can say, the equity signal, very similar to the Mag 7, which is very similar to NVIDIA. We'll take a look at NVIDIA and see it's been aggressive buyers driving NVIDIA. So traders were selling calls. Price was moving up at the same time and just continued as they stopped selling calls. So NVIDIA to Mag 7 to S&P equities. All right, let's take a look at NASDAQ now. So again, just a quick summary for the S&P 500. Opening drive to a call peak, and then traders start selling calls and buying puts. Blue line, orange line moving down in the same direction, and that's a bearish signal. All right, let's take a look at NASDAQ. So we've already taken a look at the Mag 7 signal. So let's take a look at the NASDAQ signal. Zoom in a bit. So just like the S&P 500 index signal, this is the NASDAQ index signal showing options trades and market maker hedging activity for NDX and QQQ. Opening drive, traders buying calls. They slow down. Not really a call peak pattern here, but just more slow down and then start selling calls. Start buying puts. That's bearish. And again, we already know the Mag 7 signal is moving lower. Hello, oh boy, welcome, glad you're here. Hello, Stephen, welcome, glad you're here as well. All right, so those are the setups for the S&P 500 and NASDAQ. Let's go to NASDAQ and options. Now let's take a look at the options trades. The order flow, pretty similar to the S&P 500. Buyers come in just a couple of minutes before the cash open. Took a while for the aggressive buyers to start coming in. Rising dark blue line, cumulative volume delta, buy stop order shown by the yellow line. Some sellers come in just below the NQ 21,900 level. Well, let's take a look at some stocks. I thought single stocks today were a little bit more clear. We'll focus on the hero patterns here. Here's Apple. Let's go to hero for Apple. BMX says, thanks, Doug. I like how you break things down. First of all, welcome. Glad you're here, and you're very welcome, and thank you for your kind words. All right, let's go to Apple. Opening drive. Note the flow alert that comes in just after the cash open. Nice pullback for a long here, right around 950. We'll see this several times today. Large institutional call buyers coming in. That's shown by that vertical line and the call signal. Opening drive, institutional call buyers come in, and then a call peak pattern. Right around 11:10. Call buyers abruptly take their foot off the gas, start selling calls, and Apple reverses lower. So long entry right around here, this nice pullback. And then a short with that call peak pattern. Very reliable pattern. Let's go to Apple. So there it is. Trend break long. And then call peak. Another trend break. Nice pullback for a short at the first market pulse price change extreme. Interesting how these buyers moved up right here from 244 to right around 244.25. So that would be the next target at that looks like 244.25. Right there's this high liquidity. If traders continue to take negative delta positions. And let's go back to hero. All right, so it looks like the call sellers and put buyers have taken the foot off the gas. They'll have to start taking negative delta positions again, most likely, for Apple to get down to that liquidity at 25. All right, next stock, Meta. And remember this pattern right here of this institutional buy order. Again, we'll see that again. So this one was right around 10.12 in Apple. Next stock, Meta. Not as big, but this order there helped to kick off Meta from this pullback. So we'll zoom in on this. So Meta looked like there might be a bullish opening drive here. A flow alert comes in, call buyers. They pretty quickly take the foot off the gas. Then this institutional block order comes in, call buyers, and then the other call buyers join the party there. Meta moves higher. Then this is more of a consolidation pattern. Just more of a rounding signal. And now consolidation as the orange line and the blue line flatten out. So again, this was kicked off by institutional order. And for Apple, it was right around 10.14, I believe, and 10.12 for Meta. Hector asked last year, watched an old video regarding kickoff strategy. Just wondering if you look at a particular time range to develop. So that would be sometime in the morning. So that's when most of the price action occurs from for options from 9:30 to 12. So any time in that time period, usually maybe 10, again 9:30 to 12. All right, next stock, Microsoft. Let's take a look at the patterns again. So here's that large. Looks like maybe more than one, but large block orders. Flow alert comes in. Opening drive. Call peak pattern. In this case, traders start selling calls. So unlike Meta, which was more of a consolidation pattern, this is actually a reversal pattern when traders really start aggressively selling calls after that call peak. And notice now the orange line, blue line moving down in the same direction. So a continuation pattern lower. Opening drive, again, fueled by large block order. Other traders join in and call peak right around 10:20 to 10:25. Let's go take a look at Bookmap. And we forgot to look at Meta. So there's Meta. Trend break. Call buyers come in, aggressive buyers, shown by the rising cumulative volume delta, green volume dots. And then the call buyers take the foot off the gas. Absorption at the 624 level, the high liquidity at that level. Those levels, limit sell orders remain in place, so absorption at that level. Consolidation for Meta. Let's go to Microsoft. Sorry about that. Opening drive, call peak, right at 434. Then again, remember for Microsoft, traders start more aggressively selling calls than they are in Meta, and price moving lower. So Meta more of a call peak and consolidation, and Microsoft more of a call peak and reversal. Let's take a look at NVIDIA. Remember that hero signal in NVIDIA this morning. Let's go back and take a quick look at that. NVIDIA call sellers in the morning. Not really having much of an impact on price. Then they take the foot off the gas. So what's driving NVIDIA today? Taking a look in Bookmap, you can see all the green volume dots. Those are aggressive buyers. Traders are buying NVIDIA stock. Zoom in just a bit. Pullback entries right to VWAP for the move higher if you were ignoring hero, also noted by the Market Pulse price change extremes, signaling nice pullback entries. Price targets at the high liquidity levels at 150, 151, 152. So what I always try to do is figure out what is driving price. And in this case, it was the aggressive buyers. And you can just compare the size of the volume dots up until about 11:20. Big green volume dots driving price. Now the volume dots are much smaller. So the aggressive buyers have taken the foot off the gas in NVIDIA. Whoops. All right, back to Hero. And next stock, Tesla. You can see Tesla from the open. This was a bearish opening drive with traders selling calls and buying puts. So continuation pattern all the way down and slight call peak right in the morning. Good entry point for a short as traders start selling calls and buying puts. Great short setup in Tesla. And that continues. Tesla continues to move lower. Looks like the target in play is probably the 400 key gamma strike. Right now, Tesla at 402. Let's go to Bookmap. Go to Tesla. We tone down the volume dots just a little bit. All right, Tesla. Little call peak, right? Actually, it's probably right here, right after the open. 2 breaks below VWAP. And aggressive sellers all the way down, as well as put buyers and call sellers. Looking at cumulative volume delta, continues to move lower. Very bearish setup in Tesla. And Stephen asked, can you go over why the hedge wall is important? Stephen, there are no silly questions. So the hedge wall is similar to the volatility trigger. So in an index product, there's the volatility trigger. That is Spotgamma's proprietary volatility and gamma flip level from negative to positive or positive to negative. And for equities, Spotgamma assumes that their traders are either long puts or long calls. So really there's no shift in gamma from negative to positive. But that is the hedge walls where market makers hedging may change. And it can act as support and resistance. I don't think it's as consistent for a stock as the volatility trigger is for indexes, acting as support and resistance. All right, so very bearish setup in Tesla here. A couple of other guest stocks today here. Versus Palantir. Thought this was interesting this morning. I didn't have time to put my price lines on this chart, but I think the round number levels are pretty well marked with high liquidity. All right, let's go to Hero. Go to Palantir. Zoom in just a bit. Note a couple of key levels here. First of all, Palantir, there you go, Stephen. 77 hedge wall, put wall, act as support. And traders were buying calls. Hero was pretty flat at that point and really started more aggressively buying calls right around 10:10. Call peak pattern right at the 80 call wall, key gamma strike. Initially, it looked like it might be consolidation, but then turned into a continuation lower. No traders had already started buying puts. So an opening drive up to the, finding support at the 77 hedge wall, put wall, opening drive up to the call wall, driven by call buyers, call peak pattern, and then a reversal. Let's go to Bookmap. There's the 77 hedge wall, put wall, acting as support. Aggressive buyers start to come in. You can see all the green volume dots, rising cumulative volume delta. Looks like these orders at the 80 call wall, key gamma strike that came in at the open were absorbed. Price reversed lower and then sliced right through all these high liquidity levels. So these were limit buy orders. Note they came in again after these orders were consumed. So the buy orders got in at 77 right after the open, came back in just after that, and this time they were consumed again, but price continued to move lower, down through 76 and 75. Go back to Hero. So the call buyers came in right around 1240. Put sellers, a little bit of reversal. So continuation pattern down, reversal, continuation pattern up, then continuation down again. All right, last stock I want to take a look at, actually next to last, is SMCI. Let's zoom in on this a bit. Very strong opening drive. Flow alert came in just a couple of minutes after the cash open. 35 key gamma strike, 36 call wall. And then the call buyers abruptly took their foot off the gas right around 9:40. So very short, fast opening drive. And without that fuel to fuel the move higher of those call buyers, SMCI started to move lower. And now some call buyers have come back in, and SMCI is consolidating. So very strong opening drive. Call buyers take the foot off the gas. Price moves lower. Call buyers come back in. Now SMCI consolidating. Let's go take a look at Bookmap. SMCI. Let's check that level again. 35 key gamma strike. Looks like the opening print was right around 35 and price took off. Very fast opening drive. Pretty difficult to find a way in. These orders at 38.50 came in as price was moving up, and that's absorption at that level. Those orders at 38.50 were never consumed. Call buyers take the foot off the gas. Price moves lower. Now consolidating, and it looks like it has found, SMCI has found its way to this high liquidity limit buy orders at 36, 36, 10, 20, 30, and 40. All right, back to Hero. All right, and Suresh wanted to take a look at AMAT. Yeah, I can take a look at AMAT. Really not much to see here. This is pretty low volume or delta notional. Note this is only 9.75 million for puts. So traders selling puts looks like one or two large block orders. There were some call buyers up in the morning, and drove price up to the 180 call wall. So it looks like in terms of points, 4 or 5 point move higher as traders are buying calls. And then they took the foot off the gas at the 180 call wall. Now AMAT is consolidating a little bit below the 180 call wall. So there you go, Suresh. Call buyers driving price in the morning, and then the put sellers came in. But now AMAT is consolidating. All right, let's go back and let's check the indexes. And does anyone have any questions? Oh boy wants to take a look at Intel. Sure, we can do that. All right, so not a lot of movement in Intel. So it looks like Intel found resistance right around the 21 key gamma strike. There were some aggressive call buyers in the morning, and they took the foot off the gas right around 10 a.m. So overall, Intel down on the day after finding a resistance. It looks like just below the 21 key gamma strike. Looks like that high right around 2097. So resistance at the 21 key gamma strike. All right, back to the indexes. And there's that 6,000 key gamma strike. Let's take a look at trace. Back to trace. We're on gamma. Let's take a look at charm pressure. See if we can get an idea of where SPX may end for the day. Note the positive gamma building at 5970. So with trace, what we're looking for is large positive gamma like that at 5970, and also a spot in the heat map toward the end of the day showing blue buying support below and red selling pressure above. And this is a pretty good indication that that's a potential pinning target at the end of the day, 5970. Note the contour lines flowing toward that level. And let's go take a look at Bookmap. Go back to ES. Remember this 5970 level. Let me change my color back. Back to red, easier to see, 5970. That was right around the launching point for the move higher this morning. Now, S&P 500 back down to that level, finding support again. Let's go back to trace charm pressure. Let's see when that started to show up. And become more apparent. I'd say right around 1250. You can see this gamma starting to grow there at 5970. Also this spot here toward the end of the day starting to develop. So that's right around 1250. Let's step through time. Watch that blue bar over on the left as we step through time, starting to grow. As price approaches the gamma at that level starts to increase. Let's take a look at open interest. All right, so this is market maker's position. All right, so it looks like that as that position is growing. So market makers are long puts at that level, and traders are short puts, so they're selling puts at 59.70. Let's go back to gamma. Gamma exposure GEX. So again, as price approaches that level, that gamma is increasing. Gamma's greatest at the money at expiration. Back to Bookmap. So since around 12:50, 1 o'clock, that gamma position at 59.70 has been pretty apparent and has been growing. So that target again at 59.70. All right, any questions? Questions, comments? And BMX says this makes me want to enter SPY calls to 5.99 end of week. Do you want to buy calls or sell calls? I assume buy calls. Okay, yeah, so if you're buying calls, that would be, might be a good time to do that. So yeah, SPY trading just under 5.95 now. All right, let's go back to Hero. All right, so we know that potential target at 59.70 has been pretty apparent since 12:50, 1 o'clock. Go to Hero. I'm going to shift to total signal. So still continuing to move lower. Well, Spotgamma screen of death. Oh boy, you're welcome. All right, last call for questions, stocks. All right, this week, remember, tomorrow ISM Services PMI comes out, data, JOLTS 10 a.m., Wednesday 2 p.m. FOMC minutes, Thursday market holiday, and then Friday jobs report at 8:30 a.m. Eastern Time. All right, everyone, thank you very much for watching. Thanks for your questions and comments. And I will see you on Wednesday. Thanks again. Bye.